If you talk to any pre-seed or seed investor in the Valley, they're going to tell you it's completely a bet on the person. I have seen the craziest ideas take off that I would have given a chance to.
Yeah.
I've seen great ideas, which I thought were become lackluster. Now, we actually have a rubric that's sort of published. And what you're going to find is as I go through this rubric, a lot of the guidelines have nothing to do with the idea. It's things like, do we know how to build this? 2, can we ship this within a reasonable amount of time? Can we build it with X number of resources? What you're finding as I'm going through this is I'm not actually putting guardrails around the idea, but I'm putting guardrails around the go-to-market, the team, the resourcing, the tech, things like.
Welcome to another episode of the Business 101 podcast, where we unpack real stories, strategies, and stumbles behind building and growing successful businesses. Today, I have the honor of welcoming someone who has gone from zero to exit, and not just once, but 4 times. Raj Singh is the Vice President of Product at Mozilla, where he leads new product initiatives like Solo, an AI-powered website builder for small businesses. Before Mozilla, Raj was a repeat founder, building and selling consumer applications like Tempo.AI, which is sold to Salesforce, and All the Cooks, which is sold to Cookpad. Along the way, he's played almost every role in the startup game: founder, product builder, fundraiser, deal closer, and even growth hacker. In this conversation, we dive into how Raj thinks about building from scratch, how he validates ideas, and what he's learned about product market fit, acquisitions, and the real impact of Gen.AI on early stage founders. Whether you're a product leader, scrappy founder, or just figuring out how to scale your idea, Raj has lived every part of the playbook and it doesn't hold back. All that said, let's make welcome Raj to the podcast. Good to have you, Raj.
Thank you, Ayo. Thank you for that wonderful introduction.
Yeah, I know it barely scratches the surface of all the wonderful things you've done, and I'm hoping that we can, touch on a couple of those in this conversation.
Absolutely.
But yeah, but I think a good place to start is just to talk through your background. I mean, before we go into your entrepreneurial endeavors, well, who is Raj? How did you come to find the entrepreneurial path?
I grew up in the Bay Area, so in some ways very lucky. When I
Yeah,
grew up here, it's not Silicon Valley. I mean, I guess it was. I mean, there was Intel and Apple and whatnot, but for the most
yeah,
part, it wasn't what it was today. Was fascinated, when I got my first computer, Apple IIe, and then later with just taking the thing apart and just trying to understand it and customize it. Would literally spend weekends just like playing on my computer, trying to figure out hacks.
yeah.
Back then, you had bulletin board systems and things like that.
Hmm.
But really just carried that sort of passion, enthusiasm forward. My earliest job in my life was probably making sandwiches at Subway, but after that was very quickly fixing computers at CompUSA and Fry's Electronics, both big box retail stores that have now since shut down. And then in college, obviously pursued computer engineering. There wasn't really there was computer science, there was computer engineering, but there wasn't really like software engineering, software development. These were all kind of new majors that didn't exist at the time. But went down that path, started building, and then never really looked back. Probably had my first little business entering college, just setting up people's computers so they could connect to Ethernet. So I would basically install the Ethernet card for them and get it set up, the Windows drivers or whatnot, and made would
Yeah.
charge like $75 a person. And that was my first little business side hustle, and then just kept going and going. And so that's kind of how it started. And since then, I've had a number of roller coasters. Some went up, some went down. Last company was acquired by Mozilla, and that's where I'm at now.
Interesting. Did you have a parent in tech? How did you, get interested in this?
Did I have a parent that was in tech?
Yeah.
Not really. My mom, uh, she didn't work her entire career. Naturally, if you worked in the Bay Area, high probability you worked for a tech company, but that doesn't mean you were
Yeah.
doing tech. My mom
Yes. Yes.
worked at like a manufacturing plant for a chipset company. So it's like more labor manufacturing work, And then my
Okay.
dad, he worked at a tech company. It was early IBM and whatnot, but he was a mathematician. So he wasn't like so this is before the era of Excel. They had people on staff who would just do math. He would do the
Yes.
math,
Yes.
right?
Yes.
And then he left in like 1997, just when I was graduating high school,
Okay.
95, 96, 97. And then he uh, went and just became a math professor. So he really didn't stay in the tech route, kind of missed the whole dot-com boom, all of it.
Okay, interesting. And Raj, you've now launched and sold multiple startups across various industries, right? What was your mindset when you started the first one? Did you have a long-term game in mind, or was it just, "Oh, this sounds interesting, let me get into it"?
I think there's many parts to that story. I think, I grew up in an environment where I went to a high school where I'm not in the top, I'm maybe in the top 20%, but not above that, right? There was a lot of kids
Yeah,
smarter than me. When I had my first coding job, there was always one or two people who were better programmers than me. I realized very quickly, like, I'm not going to be the best in the room. So there was this constant, like, whether you want to call it chip on the shoulder or this sense that, like, I needed to prove myself, like, I can go
yeah,
do this, go build my own startup, whatnot, right? That's kind of how it started. And then how I landed at things was very much, I'm trying to think of your original question here.
yeah. I was just trying to figure out like what the initial mindset was
Yes,
when
yeah,
you
okay.
started your first business, if there was a long game in mind. Yeah.
Yeah, yeah. So I started with this mindset like, hey, I need to prove to myself that I can do this. Like, I'm not the smartest person in the room, but I can do it. And I went to a school that was really competitive. And then it was very much like, you just find some pain point and you start building. You really don't know where you're going. And in 2000, in that kind of time frame, it wasn't like today. Like, there was a very nascent internet. You didn't have
Hmm.
incubators and accelerators. You didn't have all sort of resources. It'd be very different sort of outcome process in 2025 versus in 2000. So, and you don't have a lot of that business expertise. You just know how to, like, write software, but you don't really know where you're going. So you just kind of build things. But at the same time, it was a little bit of a wild, wild west. People were putting stuff up on the internet. There was not a lot of regulation. I mean, back then you couldn't even send a MP3 without getting sued by the RAAA. Like, nobody knew what was allowed, what was not allowed. Everything was like kind of wild, new, uncharted territory. Very much in some regards to what's going on now at Gen.AI. You're not thinking about long game. You're like, can I just build
Hmm.
something and make a few bucks? And one of the interesting things in that mindset is you are bootstrapping, right? Like, you're kind of building this and you like, I need to figure out how to make money. Whereas interestingly, later in my career, when I started taking venture money, it really changes your mindset, not necessarily in the most positive way, but it changes your mindset in a perspective where you may be thinking more longer term and not focused on, like, am I building value versus am I just chasing small dollar amounts?
Yeah.
There's a real pro and con and real trade-off. And one of the things that's really interesting is I look at where I'm at today, and I've in some ways felt like I need to go back to my roots, like, just build what I enjoy building just to make money, not try to play this game like, oh, is this going to be $1 billion thing? Maybe this is a few $1 million thing. Who knows? But, like,
Hmm.
there is something to be said, because when you're a repeat founder, there's a lot of expectations you set of yourself after that first success. It's always like, can I go bigger? Can I go bigger? Right. And what that ends up doing is it ends up almost poisoning your mind,
Yeah.
because you start thinking, you start eliminating concepts because you don't think they can be very big. You start creating all these artificial walls. There is something to be said about the ignorance of the beginner's mind. And so I would say, now that I've gone through public success and public failure, right, and scenarios where I've raised venture money and maybe wasn't a great outcome, it's there is something in me that says, you know what, I need to get back to how I used to think. Well, there's nothing to lose, right? You're just building. Now, like, I build something, people are following. Like, I
Hmm.
can't even build in private anymore.
Yeah.
It is interesting seeing how that thinking has evolved.
Interesting. And can you remember the most challenging product you've had to build? I guess one, did that work out? I mean, we talk a lot about the successful products that you built, or the cooks, things like that. Even the one you sold to Mozilla, those were the ones that worked. Is there any that didn't work or was particularly challenging, and what made it particularly challenging?
There was a lot of products that didn't work. And when I think about why they didn't work, in many instances, it was not the product itself. And I do think this is something I have much more understanding and experience around today versus, in the past. Previously, I'm thinking just product. I remember I had a board member that once said, "Hey, Raj, your whole board deck is all product. Like, you need to take a step back and think about the business. Business is about people, it's about go to market, it's about sales, it's about all the other sort of things that are involved." And so there was many things I had built earlier in my career, whether it was like a college dating site, whether it was a live video communication tool,
Yeah.
where I didn't have that kind of mindset. I was very much focused on product. And the outcome in the end was mediocre at best, right? Maybe it was just the money in was returned, or maybe it was a net negative. I don't know. Well, I do know, but, case by case. But the point is, had I had, and I tell people this is a little bit of a trap. Like you need to take a step back, like it's hard to do, right? Like when you're in the middle of building, you're so deep in product that you forget to take a step back, but you need to take a step back on some cadence. And there's different systems I've now built, right? Will almost always be hands off for a period of time before I kind of dig in, just to keep myself in that step back kind of perspective. You have to take a step back and then think big picture again. Like what is our big goal here? Like, what are we trying to achieve? And then, are we
Yeah.
doing the right things? Are these the most important things? And where are the big gaps? And I would say in my 20s, yet another mistake, your mindset in your 20s is like, I can do it all. Like,
Yeah.
this whole one person $1 billion company nonsense that's being espoused now because of Gen AI,
Mm.
I think is just hyperbolic
Yeah.
nonsense. Like, you're going to have, yes, we can build more efficiently. Yes, we can build more. Yes, we're all thinking too small, but there's going to be lots of gaps in your company, in what you can do, and you're going to need help. And agents aren't going to be able to do all that work, AI agents. And so now in my 40s, I have a much better understanding of where my strengths and weaknesses are. And then on top of
Mm.
that, I have a network that I can now ping and leverage when I need that kind of fractional expertise, or whether it be Gen AI.
Yeah. Well, yeah. That makes a lot of sense. That makes a lot of sense. And thanks for sharing that. Now, I want to touch on something you mentioned briefly earlier, which is the fact that, when you started off, you were mostly building on your own, maybe solo bootstrapping. Now you're at Mozilla, leading new product innovation. And that's very different. It's a more regulated, more modulated environment, right? How does building from zero to one inside a bigger organization, how does that look like in practice?
When you're building on your own, you really don't have a lot to lose.
Yeah.
You can, it's really the sunk cost,
Yeah.
particularly if you're like in between jobs or whatnot, like you're out of college, like start building, right? I tell people if you actually built anything, you're already doing 99% better than everyone else, because most people never even
Mm.
get past the idea step.
Yeah.
When you're building in a large company, there's a lot of other things at play. And I could break down some of those differences and I'll talk through a few of them, but it's a textbook of things that are different. So, for example, how do you incentivize people to work as hard and to care as much? It's amazing how much better products can be if you really, really care, right?
Yeah.
But when you're in a larger company, the incentive structures are not designed where you have all the upside if you succeed, but you also are basically out of a job if you don't succeed, right? In a larger company, you're
Yeah.
basically protected, right? And this really can kind of change how you make decisions, because some of the best decisions are made out of scarcity, not out of abundance, right? You have to make a choice. Do I do feature A or do I do feature B? Rather, I'm going to do both, or I'm going to delay that decision, right? Those are not choices in a small company because you're simply going to
Yeah.
run out of money. Oftentimes, when you're building in a larger company, you're building adjacent to the core product. So you have an audience that you can
Yes.
already sell to. But for many companies, you're building net new. And if you think about how talent is hired within a larger company, they're often they're specialists. They're folks that have been doing SEO their whole career. They're folks that have worked in a
Yes.
particular domain and doing user account registration their whole career. They're folks that have
Yeah.
done UX design, in a particular for settings their whole career, whatever it is. But when you think about startup, it's very generalist. You're not really a specialist. And most product managers, for example, have not had to go through the motions required to acquire customers, to
Mm.
sell a lot of the activities that are oriented around product marketing, all those sorts of things. So that's a mismatch from talent, right? When you start thinking about that within a larger company, even the career level guides and how people are promoted, it's completely mismatched. You think about core products, PM's responsibility, they're probably managing a lot of PMs, they're managing a lot of different stakeholders. Their objective is really to squeeze a 0.1% improvement out of a
Yeah.
particular workflow.
Yeah.
Whereas in a early stage product in 0 to 1, you have no data.
Exactly.
You have to create your own conviction. You have to sell it.
Yeah.
And you're going to get a lot of different opinions and a lot of different shiny objects thrown at you and a lot of different like non-consensus. And you're going to have leaders saying you should go this direction and that direction. And you have to have enough confidence to basically push back. And that's all very hard and very not comfortable, if you've mostly been in
Yes.
a ladder based career in larger companies, right? And so
Mm-hmm.
these are
Yeah.
just ranges of examples of why it's challenging. I mean, there's other things like the natural administrative and legal overhead of a larger company doesn't allow you to play in gray areas, which is often necessary to drive growth. And so,
Yeah.
I think there's pros and there's cons, but there is also a reason why many of the biggest success do not come from the large companies. They often come from small startups when you wouldn't have expected it, that just become massive. Now, of course, large companies then go and acquire them, but
Yeah.
there's a reason that pattern happens.
And what is that? What is that reason?
Well, I think for all these reasons that I've just described, like why it's so much more
Hmm.
difficult to build in a larger company. I think when you're in a startup, the singular focus, no distractions, the fact that you don't have this sort of legal firewall and general
Yeah.
administrative overhead, you don't have leaders that might pull you in different directions. You can really take a long-term view where it's not
Yeah.
uncommon when you're thinking about new products within a larger company, leadership changes and they lose enthusiasm and they're looking at it from a 1 year perspective because they're much more
Yeah.
focused on the next quarter or next half.
Yeah.
Where when you think
Yeah.
about new products, you're looking at it from average liquidity for a startup is 7 years, right? So like you have to
Yeah.
take a much different perspective. I think it's a combination of things, but you also have a lot more founder product fit. Typically, if
Hmm.
you're working from a scarcity perspective, you have some passion about some problem you want to solve. When you're in a larger company, you're kind of being thrown at a problem, right? And you may not come with
Yeah.
all the domain expertise or have that ability to really come up with strategic execute, like, creative ideas for execution,
Yeah.
whatever it might be. So I think those are some of the many reasons why you might have advantages in a building outside of a larger company. Now, building within a larger company, you have more less anxiety,
More resources.
a
Yeah.
little bit less stress. Your job's protected. You may have audience that you can cross sell and upsell to, which is a huge advantage. You have the resources of the larger company, right? So there are also some advantages too. Don't get me wrong, but I think if you look at a lot of new products efforts across a lot of organizations, particularly Fortune 500, they mostly have failed. They ultimately end up acquiring. Right. So I give a lot of credit to those that succeed, but I think one of the key things here is recognizing like what are those challenges and then seeing like, hey, can I put in place the guardrails to try to increase the odds of success? But we should also
Yeah.
recognize the odds of success are very low, right? Like out of 100
Hmm.
startups or whatever it is, right? Show anything
Yeah.
material, right? You're not,
Yeah.
we should be batting better than that in a bigger company, but the question is, it's not going to be 1 out of 2, right? It still might
Yeah.
be 1 out of
Yeah.
50 or 1 out of 40 or whatever it might be.
Yeah, yeah, that makes sense. And Raj, something very important that you spoke about was, the fact that when you're building outside of a bigger company, and you're just on your own, you literally have nothing to fall back on. And even though that's a difficult place to be in, that's a place where a lot of good ideas actually come in, when there's no guardrails and you can throw all of yourself into the idea and just give it your all. If it works, it works. If it doesn't, right? And a lot of the beautiful companies that we now celebrate, were born out of that place. But I want to zone in on kind of your expertise, right? Mozilla, you're in charge of, new product innovation. And I feel like a very important part of that is one validating products, right? And just kind of zooming in on product validation, right? What's your personal framework, or what kind of frameworks have you seen work in terms of evaluating new ideas, especially in the early days where there's little to no data, no traction? Most founders are just working on a hunch.
If you talk to any pre-seed or seed investor in the Valley, they're going to tell you it's completely a bet on the person. Um, we don't necessarily attract those kinds of people into big companies, right? Like if you're a serial
Oh,
founder, you're
yeah,
probably not applying to Mozilla or Facebook or whatever it might be. You're probably, you probably are pursuing your startup passions or whatnot, right? So I have two sides to this, uh, to this, and I think the key thing I want to call out is there is a little bit of luck, and you just simply don't know, right? Like, I mean, we're going
oh,
to apply some frameworks and rubrics to try to make the best decision, but I'm thinking about that from the perspective of like what works for where I am at. So, like, what works
hmm,
for Mozilla,
yeah,
right? As opposed to what might be the best idea, and that's very important to distinguish because you might have a great idea, but it may not be great for Mozilla, right? Or may not be great for our team in this particular circumstance. And the reason I say this is to score whether an idea is good or bad. Like, yes, I might have an opinion, but I have seen the craziest ideas take off that I would never would have given a chance to. And
yeah,
I've seen ideas that I thought were like terrible ideas become a blockbuster, right? I'm sorry, I've seen great ideas which I thought were become lackluster, right? So I've seen both
yeah,
ends of the spectrum, and so I've come to realize like there is a little bit of random walk theory here, right? Like nobody really.
yes,
Yeah,
yes,
it's very
yes,
difficult.
yes,
Obviously, when you get to Series A, Series B, later stages in a company, it's much more quantitative. Like you can look at a spreadsheet, you can kind of extrapolate. You can almost reverse engineer a whole business from looking at
safer bet,
right?
yeah,
It's a very different
yeah,
kind of game. But when you're talking about early stage, there's a reason most VCs, most funds are chasing one unicorn out of 40 investments because they know the
yeah,
vast majority of them are going to fail. Now, within my teams, we actually have a rubric that's sort of published. And what you're going to find is as I go through this rubric, a lot of the guidelines have nothing to do with the idea. It's things like, do we know how to build this? That sounds stupid simple, right? Do we know how to build this?
Hmm.
But there are
Yeah.
things that are just too hard to build. They may require research, may require specialized knowledge, and we can't recruit those people just because of the capacity of where we are. They don't want to join Mozilla or whatever it might be, or the funding, whatnot, right? Two, can we ship this within a reasonable amount of time? Like, we have some kind of time frame, let's call it 6 months or 9 months or whatever, right? There are great ideas that might take a much longer time horizon. You could argue that
Yeah. They
ideas
just get dropped because of that.
well, maybe you're building hardware, right? Maybe you want to build
Hmm.
maybe you want to build some IoT device like a wearable sensor or whatnot, right? And
Yeah.
naturally, like the challenge here is there's a what I call a conviction window. And it's that window that you have a leader that has conviction around a certain concept. But if you that window is short, and because big companies don't think 5-year horizon, they tend to think, in halves or quarters, right? And then leadership changes, right? Naturally,
Yeah.
there's natural churn in companies. And as leadership changes, what new leaders might be enthusiastic about may not match what previous leaders were enthusiastic about, right? So
Yes.
you do have to constantly show some like progress. Otherwise, there's risk of the whole thing just getting shut down, right? So that's like sort of another thing. Can we ship this within a certain amount of time? Can we build it with X number of resources? Hiring and bringing on new talent is not as easy as it may feel. Like in a startup, you often go and way over raise what you need in the moment, right? You go and raise
Yeah.
5 million bucks, 10 million bucks, right? The last like 2, 3 years. It
Yeah.
used to be on 18 months. Now people are making it last longer, whatever. But you're hiring 10 people when you're making no money, whereas larger companies are going to be much more guarded in terms of how they resource a particular idea, right? They might say,
Yes.
here's 4 people, we'll scale to 5 or 6 if you show a couple proof points, we'll scale to 7. This is a lot closer to what fundraising was like in 2008 with tranched investments, right? And it's very
Hmm.
difficult to plan in that way because if you're doing long-term
Yeah.
planning, it's like, wait, it's milestone-based unlocks. It's very hard, right? So
Exactly.
can we market to these users? Like for example, is there a way we can reach these users? Like if we're building something and let's say it's a consumer company, a consumer Fortune 500, and the idea that's being pitched is like a B2B product into like regulated government, like that's
Hmm.
not playing into our existing strengths, right? We don't have a
Yeah.
company culture that sells into regulated government. We don't have that DNA. We don't have those people. We don't have that network, right? That's just higher risk because that's building a new go-to-market function, a new audience. We
Yes.
may not have the time to invest in it, right? So I'm kind of going through some examples, but these are what you're finding as I'm going through this is I'm not actually putting guardrails around the idea, but I'm putting
Yeah.
guardrails around the go-to-market, the team, the
Execution. Yeah. Go to
resourcing, the
market.
tech, things like in thinking about how to select idea. I think this is important because one of the other things you'll find when you're dealing with like new product development and organization, and if you have a team, let's say, whose job is like come up with new ideas and build it, is if you don't have any sort of guardrails,
Yeah.
you get a lot of analysis paralysis. You get a lot of like
Yes.
ideas being pitched and they kind of go 2 months in, they're like, no, it's not the right thing. They spin. And next thing you know, 24 months later, you've like spun through 7, 8 ideas and you have nothing to show, which is like a
Hmm.
terrible position to be in. It's much better to like make a bet and just be wrong, like spend 12,
Yeah.
18 months and just be wrong, fine. But at least we made a bet and we made an attempt and we tried, right? And we learned. But spinning is much worse. And the reason this happens is when you're in a startup, you're accountable for failure, right? Like you start a company on your own. If it doesn't work, it's kind of your responsibility. If it succeeds, it's your responsibility. And I do joke with
Yeah.
people that if you succeed, everyone takes credit, but if you fail, they blame you. All right, that's
You.
how it is.
Yep. Yep.
But the
Yep.
thing
Yep.
is, if you look at the natural tendency of like the folks that join larger companies, many of these folks have ladder careers, not map careers. They're not jumping around from startup to startup. They're mostly like stayed within a particular sort of occupational vertical and they've kind of worked their way up. They might jump from one
Hmm.
company to another company, but they're kind of working their way up in a similar domain. The natural incentive structure of larger companies rewards success, right? And so many of these folks have never experienced public failure. So it's like super scary
Yeah.
to be wrong, right? And it like
Yeah.
completely
Yeah.
works against their ethos and how they think about career laddering and whatnot, right? And so
Hmm.
that's really, really difficult, particularly when you think about the first phase, which is idea selection, right? Because they're used to having data, they're used to getting consensus, but now they have to
Yes.
make decisions with no data and off
Hmm.
intuition. And they have different leaders that are all have influence saying different things. And that's really
Yeah.
hard because if you look at how career leveling works in larger companies with calibration, they're asking for everyone for their feedback, right? So you can
Hmm.
imagine like, oh, I want everyone to be happy, but that's not a possible outcome, right? So it's very uncomfortable. And I think for a lot of these reasons, this is why you do need to have some sort of rubric. Now, of course, once we have an idea, Of course, I look at things like, okay, technical risk, market risk. Can we reach this audience? How big can it
Mm,
be? Do we know how to
yeah.
build it? Do we have any advantages, right? Like thinking about moats, particularly in, I don't
Competition
believe in
and
the
things like
concept
that.
of like blue ocean. Like everything's a red sea. Like every
Yeah,
concept, every idea has been done, taken. You're going to be competing, but can we compete? Is there a larger strategic story?
effectively.
Is there a way we can disrupt, right? There's all these sorts of questions. But what I
Mm,
will say is there's no like, oh, go fill out this form and I can definitively tell you this is good or bad. I'm certainly making a bet. I could certainly be wrong. I could certainly be right, right? But like, you're making a bet, right? And then you're going to give it your best shot. And of course, some of them may not work out. But what we really need is one to really work out, right? That's
yeah,
the game.
yeah, yeah, yeah. In your experience, though, I mean, you're in a vantage position where you've experienced what it's like in a big corporate, big company structure, but you've also experienced, the days of bootstrapping and being your own and trying to make decisions on what ideas to pursue and things like that. Which is more personally, which have you found more comfortable or I guess a better fit for you, right? Do you prefer, the old days when you could do whatever, pursue any ideas that you thought was
It's funny.
worthwhile,
So I
or
have this
now?
thing where when I start feeling comfortable, I get uncomfortable. It starts bothering me. I'm like, why does it feel so comfortable?
Why am I so comfortable?
Yeah, and you know what's funny is doing my own thing and building startups from scratch is really comfortable. Like it's crazy
Interesting.
because for most people
Ah,
that would be like extremely uncomfortable. Because
exactly. Yeah.
I've gone through it multiple times, I have such a large fractional network of people I can tap for anything I need, for all sorts of different expertise areas. I have people
Yeah.
that will give me money because I made them money in the past. Like money and
Uh,
financing is not sort of an issue, and I've had some exits, so I'm comfortable from that perspective, right? That's the comfortable path I run.
hmm.
I'm really enjoying my time at Mozilla, and in part because this is new for me, right? Like, can I scale and build this within a larger company? It's a different kind of
Yeah.
challenge. If it starts feeling too comfortable, then we'll see, right? But right now,
Hmm.
I do feel like this low stress. Like, okay, I got to figure this out. I got to figure out how we can grow this faster, or how we can turn this into a real business. So this is a different kind of challenge I'm really enjoying. But of course, if you're going to talk about on a 10-year arc or 15-year arc, for sure, I'm going to be at some point back doing my own startup. I don't know when that will be,
Okay.
but for sure.
Interesting. Yeah, yeah. And you've said in the past that, some product managers make better decisions than others, right? What do you think is responsible for that? And I guess what separates the good from the great in product management?
It's one of those interesting questions. And I tell people if you're a senior product manager, like if you're, growing in your function, your crafts, your job, whatever, you need to be making better decisions more often, right? Like,
Hmm.
if you've been doing like,
Yeah.
I don't subscribe to this notion that like you should be making as many wrong decisions as you were making 5 years ago. Like, no, like
Hmm.
there are right answers. Like you need to be right
Predictably
more
better.
often than you're wrong, right? That's what comes through seniority is that
Yeah.
you have enough pattern matching or intuition or whatever it is that you are more right than wrong, right? And that's
Hmm.
critical. Otherwise, it's not going to work, right? Now, to your question, one thing I've noticed over the last few years, and if you look at like Lenny's podcast, and there's like Shreyash Doshi with his content. There's
Hmm.
Tall, get his name on Maven as well. There's the entire Reforge community, et cetera, whatever. There's like a product leadership alliance. There's a massive product like content marketing community or whatnot that's formed over the last few years. I mean, it's incredible.
Yeah.
Like product management, content creators, like how to run product, how to build business, etc. And there's a lot of leadership and development budget being thrown around across Fortune 500, and people are taking classes everywhere and trying to upskill and learn more, and it all makes sense. It's all great. And I always come back to this sort of paradoxical question that there are simply PMs that make better decisions more often than other PMs.
Yeah.
And they may or may not have gone through all that training. They may or may not even have all the rubrics or frameworks or whatnot. And the answer is why. And I don't have a great answer for you.
Hmm.
A year or two ago, I went real deep in trying to look at like what is product management as a craft, right? Because as a founder, you're of course leading product, but you also have a lot of other responsibilities. But in my current role, I'm
Yes.
almost singularly focused on product management.
Hmm.
And I took a very systematic and methodical approach. I kind of like attended PM events. I followed PM leaders. You name it. Like I kind of went up and down the gamut, joined PM communities and so forth, right? And I
Yeah.
kind of consumed a lot of information. And out of that came some very interesting things like, oh, can you break down the product management role or any functional role into like dozens and dozens of competencies? Think of like a game
Yeah.
characters with attributes like jump skill and shooting skill and agility and whatever, right? The same kind of framework could apply to functional roles. And could you level up in different ways? And I think all those things are true, but there is still this thing where there are people who make are more right than wrong, or there's people who more likely succeed than not, like if they're running their own startup. And the question is why. And I don't have a great answer for you. It's something. It is kind of. It's one of these questions I point out, but I'm certainly still something I'm thinking through. Like, how do you evaluate that?
But don't you think that the desire to be more right than wrong could potentially make like more senior product managers less risk seeking or more risk averse in the sense that they don't then take a lot of chances on new ideas, which might make them increasingly more right, but then they lose out on like the big
Yeah,
opportunities that disrupt.
I think naturally when you have success, you become a lot of people think when you become successful, you will take more risk, but it's actually quite the opposite. You become
Yes,
successful, you start trying to protect your brand and protect your wealth,
exactly.
right? And you actually become a little bit sometimes more conservative. A lot of credit to folks who take a lot of risk. One rule I use with products, I pretty much say linear growth is failing. Like if you're not accelerating in your growth, you're not growing fast enough because startups double every year, they triple every year, right? Large products, large companies, mature products, they're the ones growing linearly, like very slow, right?
Yeah,
We need to find step functions. And so if we don't see a step function, then are we taking enough risk in the product? Are we taking enough risk in our marketing? Are we taking enough risk somewhere? I don't know, right? And so it's very uncomfortable because you have something that's
yeah,
kind of humming along, but you don't, knowing when to make that kind of bigger decision. It's really hard, really uncomfortable, and you don't know. But like for me, if it's linear, it's not good enough, right? That's kind of how I think about it. And then the question is like, what's the biggest risk we can take? Because we want to take risk. I mean, that's the big startup advantage. Like you can take risk.
yeah.
Obviously, in a larger company, it's a little bit harder because you do have legal guardrails and reputational and brand guardrails and whatnot. So, but yeah, I agree with that sentiment.
Interesting. And now let's zoom a bit into AI, which you're right in the middle of it right now, right? The first thing I wanted to ask is, so, I mean, you're deep in the AI space right now, and in your experience, what are some tactical ways you've seen AI help small businesses or solopreneurs? How can new business owners leverage AI to grow faster right now?
I think Gen.AI has been marvelous in sort of giving every small business owner access to fractional expertise. I mean, that's kind of our whole thesis with what we're doing with small business products at Mozilla and Solo and others, right? And they're using it in all sorts of ways, whether it's
Yeah.
helping them draft copy, well, creating ads, creating logos and images, whether it's asking questions about their competitor, building their website, whether it's
Uh,
producing content to post to social media, writing blog articles. We have a product within my team where we're looking at virtual receptionists. So when you're that small business owner and you're busy, why have voicemail pick it up when you could have something really smart that you could talk to pick it up with your real
uh,
voice? Then you can go back and forth and capture that lead and whatever and follow up later. I think you're just seeing tons and tons of like just creative energy being harnessed through Gen AI,
yeah.
and people are identifying and seeing every way they could use it, right? Like you're a designer, interior designer, you might be asking ChatGPT for its recommendation on layouts of windows or layouts of doors
Uh,
or rugs, or you might be in the fashion space and you help people dress well, and you might be asking it for feedback, right? You might be counselor and you're dealing with like a tough therapy situation with one of your
yeah.
clients, and you might go and ask ChatGPT and say, how would you approach this? What are things I'm not thinking about? Fill the gaps. What do the fact that it basically has given everyone a PhD in their pocket. I think, I tell people this is the Neuralink, right? People are talking about Neuralink and implant it in your head. I think what we got wrong is it doesn't need to be a physical device. It could literally be software, and it's on in your phone. We already have it. We don't need to implant it in your head. That's where we got it wrong. We have Neuralink now. It is ChatGPT. And I think small business owners are using it in all sorts of ways to drive growth. This is the future of the economy, right? Like if you look at Gen AI, certainly, obviously, tech eating the world. They're becoming their aspirations are no longer billion; it's like trillions, right? They want to own everything. But
Yeah.
small business owners is the fastest growing segment in the U.S. Trades, solopreneurs, freelance consultants, side hustles, whatever you want to call it, And
Yeah.
they now have the tools necessary to go and build and accomplish what they need. And I think that's just amazing. We're building products for this audience to help them accelerate because we want to encourage and get more folks to sort of build, become
Yeah.
business owners, this sort of ownership economy. But I think this is a massive unlock. And I think it started with
Mm.
COVID, with sort of remote work.
Yes.
And I think
Yes.
it's accelerated now because I think people realize, like, hey, I want to be my own boss. I want to pursue my passion if I can make a
Yeah.
career out of it. Right.
Yeah.
And so let's see how it continues to play out. But this is the sort of drumbeat of the economy.
Interesting. Are you worried at all? I mean, you kind of said AI is like the Neuralink of the world right now, and in recent weeks and months, we've heard about AI having its own mind, going rogue, hallucinations, and things like that. Are you worried for the future of AI?
No, not in the way that the doomers present the situation right now. So
Yeah.
I think a lot of things in a lab are very interesting, right? Like AI might try to figure out ways to deceive you because it wants to accomplish a certain outcome. And of course, they're pushed and
Exactly.
stressed into these different ways. But for the most part, right now, I think of AI obviously doing some automation, but mostly with human in the loop. And the reason is it's not perfect. It's like 95%. I call it, I actually call it like a 95% rule. When you think about UX, think about things that you're building, how can you build an experience assuming the AI is 95% accurate? Because
Mm.
uh, you can't assume 100%. Otherwise, for example, companies like Calendly would never exist, right? The fact that it's manual scheduling is because AI can't schedule perfectly. It gets some of the events wrong once in a while. And of course, we can't afford being wrong when you're dealing with scheduling meetings, right? That would be terrible,
Yeah.
right? The click penalty cost there is too high. Same thing with self-driving cars, etc. So when you think about it in
Hmm.
that mindset, I think of it as much more an assistive sort of technology. It's like helping us and augmenting us in many ways. It can do work. It's basically 10xing our productivity. And I think the reality of I think what this does is companies now are thinking bigger, right? So startups obviously are building faster and the signal noise ratio there. And then larger
Yeah.
companies are thinking bigger. They're like, I now, whereas previously I might be focused in these three spaces, now they want to own it all, right? And now they're touching and, rubbing shoulders with a lot of their largest competitors in ways that they
Yeah.
weren't before, right? Because they all want to own it all. And so it's really interesting to see how that plays out because they're just going faster, right? Like this whole notion
Yeah.
that like, oh, we're going to hire less, fine. Maybe there's going to be some transition in terms of like we don't need as many fractional experts here because we have more generalists now here. We need more fractional experts there, whatever, right? But ultimately they're just simply going to do more. Right. So they're going to
Yes.
need 10x the number
Yes.
of employees because they want to 10x their goals, right? Their productivity, their
Yeah.
output. They want to get to 10 trillion, not, 10
Mm.
billion. Right.
Not 10
So
billion.
so
Yeah.
I'm very much in that sort of camp. I'm not in the camp like, oh, it's going to take over the world, or at least not in my time frame.
No, okay, that makes sense. Personally, I think one of the things I like most about AI, and especially generative AI, is the fact that it allows, non-technical founders to be able to start products, build products in the tech space. And that used to be a very restricted space that, you had to have like tech education or some tech experience to go into that space, right? But from your experience, right, what are the few one, two, three things that you think non-technical founders need to understand, especially about how Gen.AI is changing product strategy to be better innovators and better product builders?
I think so. I call that democratizing fractional expertise, right? And so I do love the fact that Gen AI has enabled people to unleash all their creative energies and ideas in
Yeah,
ways that they couldn't before. And they can now express
yeah,
things through vibe coding and vibe creation. And vibe as
exactly.
just
Yeah,
an interface is almost a new modality, like chat
yeah,
the whole world, right? So I think the big difference now versus let's say 5 years ago is even if you are using Gen AI to let's say do your accounting,
hmm,
you still need to understand the concepts of accounting and
yes,
how to review if the output is correct and how to have enough
yes,
sensibility and taste to determine if something went haywire. If you're
hmm,
using Gen AI to design a UI, you still need
yeah.
to have some design sensibility. Like you have the taste to see like this looks right, this looks wrong,
Does
this
this make
feels good,
sense?
this feels unique, this makes sense, this is directionally where I want, this will address this pain point or whatnot, right? And I think there's a misperception that I can just go to Gen AI and do this and do that without that taste or without that sensibility. And I think
Mm,
sure, you can get a 80% version out there, if you just want to show something or whatever, right? But like
yeah,
it probably has errors or whatnot. But if you really want to take it to production, I don't see like you do need to be generalist in some way, right? Like you still need to have computer science doesn't teach you how to write code. It teaches you how to think in a algorithmic way. It teaches you how to break down a problem and think about things in a series of steps. And that's critical when you're building engineering products, right? Like engineering products. The same
Yeah.
thing with Gen AI, right? We think about Gen AI. Yes, I can have Gen AI write the code, but I still need to know how to break down the problem and break it down into steps. If I want to build it in a way to reduce the chance of it getting it wrong or introducing bugs. And we hear about all those sort of horror stories. And it might be a long ways before we get that all figured out. I mean, obviously they're trying. So for non-technical founders, for sure, they should use it as an accelerant everywhere they can. It's always available 24-hour. But I don't think they should think of it as like, they still need to bring their own taste. They still need to bring their own sensibilities, their own creativity. They still need to have a conviction around where they want to take this, some vision of what the future is going to look like, whatever it might be,
Yeah.
because I think there's media might present it in a little bit of a hyperbolic way where it's like, oh, it's going to replace you and do all your work. And yeah, I mean, it's great to say that, but that's not what I'm seeing in practice.
Uh, Interesting. Interesting. Okay, that makes sense. And we kind of started talking in this direction, but let's talk a bit more about like exiting, right? Because a lot of people are now, trying to vibe code, start up something and sell. Everyone wants to sell. What do you generally see happening in the industry right now in terms of how much money is flowing into the industry, what the chances of exiting are? What kind of product do you see that's, been successfully built and exited, and which ones don't seem to be working out?
This is its own like our topic, like how you acquisitions and exits work. What I will say
Yeah.
is, again, we're talking about tech companies, very different everything about
Mm-hmm.
small business, like exiting your
Yeah.
subway business or your gas station or whatever it might be, right?
Mm-hmm.
Historically, there's always been three or four different kinds of acquisitions. There's what I used to call soft landing, which is really like offer letters to teams. And you're seeing increasingly that, right? Like if you look at these recent blockbuster exits like Windsurf, it would be wrong to call it a soft landing because these are incredible payouts and whatnot, but
Yeah.
kind of falls in that bucket, right? Because historically, soft landings are not a good return for your investors, and it's just really money for some of the team and some kind. It's effectively getting jobs, right? Then you have like team plus tech, so you have the team plus some value applied to your tech. And then you have like strategic, right? And strategic acquisitions are rare, but those have outsized outcomes, right? Those are the ones where the CEO wakes up one day is like, we need to buy this company, we need to add their revenues accretive, whatever it might be.
Yeah.
They spend a lot of money, they buy whatnot, right? You were seeing a lot of these sort of like team plus tech, acquihire, soft landing type acquisitions through the last decade. Tons, right? Yahoo went crazy. They bought like 200 companies. I mean, it's just the entire gamut of things from category to category. And you started to see a lot less. Part of the reason is one, buyers have gotten more savvy. They sort of realize, like, hey, when you buy a company, it's very difficult to integrate their tech. We end up rewriting it anyways. They also see that in many instances, the people leave. They're not able to retain them, right? So
Yeah.
and they can offer huge sort of salaries because if you look at the salary delta between a startup and a large company, it's a
Mm-hmm.
much wider gap it is today than it was like 10, 15 years ago, right? So they know they can sort of get these people if they want to get them. So you're seeing less of that. You still see strategic acquisitions happen. That's certainly there. And those will always be there. What you're now seeing is these kind of soft landings, and the vast majority of them don't get reported. These are like
Mm.
some startup, some team, and they want to buy the team. And part of the reason companies want to buy these teams is because there's a lot of data. It's very clear, like small teams of 6 to 8 people are just highly productive. And, startup attracts a certain kind of talent, archetypes, let's say. Agency tend to be high agency folks, tend to be folks that want to go figure it out and get it done. Natural rule breakers, whatever it might be, which a lot of large
Yeah.
companies feel they have gaps there. And it's an
Yeah.
area that they need to focus on because they just can't go fast enough. There's always a sense that we're going
Mm.
slower, right? So
Yeah.
I would, this was like a super TLDR version of that question, but
Mm-hmm.
like, the
Yeah.
point being is there is a wide range of types of acquisitions. We're seeing rules being rewritten now. It's very interesting looking at how, FTC and regulations around merger acquisition reviews, whatnot, has affected how big tech is approaching acquisitions, like blockbuster
Mm-hmm.
acquisitions. Like historically, they would
Yeah.
just bought companies. They're not doing it now.
Yeah.
They're figuring out ways to work around it. I find that all very
Mm-hmm.
interesting. But the entire venture model is based on a premise of like, I invest, there's some liquidity, there's new investors. Things are being rewritten now, and it is constantly changing. Even from a venture perspective, it's become much more transactional. Raising money 10, 15, 20 years ago was a relationship driven thing. You knew somebody, you built a relationship, there was trust, whatnot. Right now,
Yes.
you have a call, you have another call, and transactions are done within 3 days and it's fully remote. I
Yeah.
mean, this is wild, right? And this has, in some ways, affected many traditional investors that haven't been able to adapt to this kind of model, and in other ways has created a rise of a new set of investor class. The social media natives and the folks that are out there and have large networks, right? So
Yeah.
it's interesting watching how all of this sorts of play out. You're now starting to see even like SaaS kind of playbooks being applied to
Yeah.
investors. I'm seeing investors do um, effectively AI SDR, like automatic cold email outreach to
Mm.
companies that their internal systems are saying,
Interesting.
"Hey,
Yeah.
this is performing," and just reaching out because the volume of signal, like the volume of companies, is just so large.
It's just so
Really
large.
interesting
Yeah.
seeing all these sorts of different dynamics in play.
Interesting. And in terms of, personal exits and like founder outcomes, before you used to believe that at least for the longest time, you need to build a product or something to have like $100 million exit, right? But now in recent months and weeks, we've been hearing about, for example, Meta, hiring engineers from OpenAI and throwing around these $100 million packages at them, right? Do you think that's a sustainable model, and where do you see how do you see that impacting on further advances in AI and particularly generative AI?
I think there's a feeling that Gen AI is creating rise to, we need a term. I mean, we call them FANG companies, but now we need a term for like the so-called like the super mega techs, whatever you want to call
Mm,
it. But basically,
yeah,
can I own it all? If you think about Google, their aspirations now are no longer can I own search and can I own the web and whatnot. It's like,
yeah,
can I own everything? Every
everything,
piece of software. I have Gen
yeah,
AI here. I can accelerate now 10x. Can I own your entire home? Can I own
mm,
even the small businesses? Like, can I own everything, right?
mm,
And there's a real fear that like this is such a disruptive technology, we have to invest like
yeah,
crazy. And so
yeah,
in a world like that, especially when driven off FOMO and disruption and how fast everything is going, the
mm-hmm,
salaries that they're throwing out for top talent
yeah,
is not crazy, right?
mm,
The amount of money they're investing in capital costs to build these large data centers and whatnot is massive. It's substantially more. This is peanuts. But there's always been this notion that if you're in the top 1% of what you do, or top 0.01% of what you do, you're paid an outsized amount of dollars. I think part of the challenge here, of course, is there's a lot of incredibly talented people that haven't been discovered, right?
yeah,
And a lot of that discovery comes from being at the right place at the right time or not,
yes,
whatnot. But barring that, I think you're going to see more of this. Talent is probably underpaid. And in some ways, I almost think it's a good thing because the salary function and how things are paid within larger companies have not neatly been correlated in a meritocratic way. I mean, as meritocratic as these companies are, they tend to have
mm-hmm,
salary bands, but there is like large gaps in performance between different people within teams. There are people that are simply a lot better at what they do or whatnot, right? And they should be paid outsized amounts, but the natural salary structures of how these companies are built doesn't support that kind of model, right? Google, I think, used to do these things where they would give out of salary band rewards, founder stock grants, whatever, things like that, right? But like a lot of companies never adopted that kind of model. But that stuff
mm,
makes sense because there is as simply people are just really good at this particular thing and
yeah,
the best at it. We don't recognize it enough.
yeah, 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 yeah. Well, this has been such an interesting conversation, and like you said, we could keep going for another hour, but I know you have to go soon. So I'm going to ask one final question,
Sure.
which is essentially if you were to start a new company today, right, from scratch, based on everything, all the experiences you've had, bootstrapping on your own and now being part of a bigger company, I guess, what are some things you would do differently? And what are some, I don't want to say mistakes, but what are some corrections you would make to like product strategy, product market fit, and things like that?
I think so. One thing I always tell people is what worked in the past doesn't work again. So, as counterintuitive as that might think, there's a tendency to always look at the past and pattern match. But the
Hmm.
reality is, like, the patterns shift, and what works today won't work tomorrow. And so, you have to always have that kind of mindset that it's like always a beginner's mind. I think the biggest difference
Yeah.
this time around is operating with a mindset easier said than done that you just simply don't have
Mhm.
anything to lose, right? Like, don't be afraid of public failure. Don't think like, oh, I got to make this like $1 billion thing. Just find something you want to build, right? That you really
Yeah.
enjoy and just work on it and just see where it goes, right? I think I would say at my last startup, I spent too much time thinking about how to make this really big when maybe I should have focused on like next month or next week, right?
Yeah.
Right. And is it solving my own pain? And I'm a big believer if it solves my pain, I can find 10 other people, I can find 100 other people. So I think, some of these things I say, and I will say, and I may have said this before, it's hard to internalize these things that we're talking about right? You hear this stuff and then you go make the same mistakes, right?
Yeah.
And
Yeah.
I'll read a book. I'm like, oh yeah, that makes total sense. And then I go and make the same mistake again. I've learned a lesson in the past. I make the same mistake again. This is just
Yeah.
reality, right? Like, you know, being aware is a good place to start. And so
Mhm.
I'm a lot more self-aware today than I was 5 years ago versus 10 years ago versus 15 years ago and so forth.
Yeah. 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 That was honestly supposed to be my final question, but I just remembered, like, in the early, I'd say, 2000s, 2010s, I mean, there were three big internet browsers, right? There was Google, there was Firefox, Mozilla Firefox, and then there was Internet Explorer, right? Now it's more so Google pronounced and everything. What's the future of Mozilla Firefox? So do you like, where's that headed? Is Mozilla,
Firefox is doing great,
completely
right?
leaping
So yes, so
again?
I think what we've seen over the last decade is the platform vendors are pushing browsers through their own distribution channels, right? Because they pre-bundle it
Okay.
with the OS. So
Yeah.
obviously Chrome has significant market share through Android. Obviously Safari has very significant market share through iPhone and MacBook, right? And obviously Microsoft has some sizable market share or edge at least as they push through Windows.
Windows, yeah.
Firefox remains the neutral, sort of customer first browser,
Mm,
privacy preserving, however you want to position frame it. And we have a
yeah.
large audience that uses Firefox on a regular basis and it's growing. I think the bigger question is not Firefox specific. I think your bigger question is really what is the future of the browser?
Yeah.
And
Yeah.
I can't speak to, all the stuff that we're doing and thinking about in Firefox, but I can speak a little bit more
Hmm.
macro. And it's a real question, right? Like, the internet has always been I go to a page and I consume information, but now
Hmm.
customers are getting comfortable with aggregation, right? They want to see an answer. They don't want to click links, right? They want something to go and do tasks on their behalf. You're seeing all these
Yeah.
investments into things like operator and
Yeah.
agents that can basically do work for you and do tasks for you,
Exactly.
right? This is a radical paradigm shift. Now, it's going to take a long time to transcend these new user experiences and modalities to like the large swath of
Yeah.
people that have been built and trained or in a certain way, right? Go to a browser, type in a website, etc. But it is
Yeah.
happening, and these things start slow and then they accelerate. I don't know, right? But of course, internally, we have teams thinking about this, looking at like what the future of the browser might look like. We have new products we're building. We recently had a blog post talking about all the Gen.AI kind of experiences that we're bringing into Firefox.
Yeah.
But how this is going to play out in 1 year, 3 years, 5 years, I don't know, right? And then we also have
Okay.
other things going on, which answer engines naturally are not ad supported businesses, right? Like the entire search internet model is built on ads. The entire publisher ecosystem is built on ads. So
Yeah.
if you're not clicking links, what happens? If everything is synthetic data that you're consuming, which is basically summaries and there's no ads, right? Like who's getting paid, right? So I think there's a lot of question marks. It's exciting space to be in. We're right in the middle of it.
Yeah.
Don't get, of course, don't interpret this the wrong way. We're definitely thinking hard about it, and we have all our fingers in the right places. But there is macro questions around how this plays out and what that future browser might.
Yeah. 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 Amazing. Amazing. And Raj, if people want to connect with you, where's a good place to go?
You could hit me on. I'm on LinkedIn, on Twitter at Mobile Raj. My link tree, any of those are fine. You could email me raj@rajansingh.com. Whatever works. DM me or ping me or tag me or whatever. I'm around.
Perfect. Perfect. I'm going to leave some of those links in the description. Yeah. I just want to thank you so much for making the time to be here. Thank you.
Thank you, Ayo. Appreciated it. Appreciate the
Thank
conversation.
you. Thank you so much. And yes, see you guys on another episode of the Business 101 podcast. Thank you, Raj.